if Ind AS is applicable, and if there is any change in accounting policy, or there is a correction of prior period error, which standard they can follow? They can follow IS 8 or Ind AS 8 accounting policy to apply the effect retrospectively. So only in 3 situations a third balance sheet is published. When a third balance sheet is published? When there is a change in accounting policy. When there is a change in accounting policy, when there is correction of error, and when you're applying IFRS or Ind AS for the first time, there is a requirement of 3 balance sheets. In all the 3 situations, there are 3 balance sheets published. Whenever there is a change in accounting policy, whenever there is a correction of a prior period error. Why I am using the term prior period? Prior period error. Using the term prior period error because if there is an error which is belonging to year 31st March 19, the same thing if there is an error belonging to 31st March 17, can you correct it in the balance sheet of 31st March 17 because you are publishing this balance sheet? Can you do so? If you are publishing a balance sheet of the current year, that is now in India, the first Ind AS financial statement was the 31st March 2017. So that was the current year that year. The current year was 31st March 17. Comparative 31st March 16. One additional balance sheet will be of the beginning of the earliest period presented, that is of 1st April 2015. Is the reason date of transition in India is?
But date of transition in these ACCA books, they say is after the first year of adoption. So I'm confused now. What is exactly the date of transition? In the IFRS book, it says the comparative year could be, say, 1st January 2008 to 31st December 2008, and first year adoption can be 1st January 2009 to 31st December 2009, and date of transition will be 31st December 2009. But you're saying the opposite, like the first thing is date of transition. Here they're saying the last year is date of transition. So which one is right?
When we are actually transitioning when we are converting the balance sheet, we are converting 31st March 2015 balance sheet, which is on.
Yeah, I mean, that is the comparative year, like.
And we are converting. So I'll tell you the language. So
okay.
Where the confusion is, I'll tell you where it is. It is said that Ind AS is applicable in India for the financial year beginning 1st April 16.
Yes.
Understand the terminology? That Ind AS is applicable in India for the financial year beginning 1st April 16. If my financial year is beginning on 1st April 16, when it is ending?
March 2017.
So if it is applicable from 1st April 2016, that means the balance sheet which I am publishing on 31st March 17 should be on the basis of Ind AS. if it is applicable from financial year 1st April 16. Agree?
Yes, yes, agreed. And but previous to this will be the comparative year.
Yes.
Yeah, so the transition date is actually 31st March 2017. That's when you are full-fledged, you're adopting I mean Ind AS. Before
That is
this conversion period and converging to
transition year is beginning from 1st April 16.
right.
We are publishing first Ind AS financial statement of 31st March 17.
Yes, okay, that's
Able
transition.
to be able to comply with all the requirements of Ind AS, we are required to publish current year balance sheet 31st March 17 on Ind AS. Along with it, we are required to publish comparative of 31st March 16, that too on Ind AS. And to be able to do so, we need to transition the balance sheet of 31st March 17, 31st March 15, which is on previous GAAP. We need to convert it to Ind AS and have a balance sheet of 1st April 15 on Ind AS. To be able to do this process or
Yes,
publish
your explanation makes sense. Like, yeah, that should actually be the transition date. But
so
the
just
book says that 31st March 2017 is the transition date. So
so
maybe
so,
the book
so
is wrong.
whatever you have read, please read it according to my way of reading it.
All right. Okay.
Don't interpret it according to your own way. Please read it the way I'm doing it. Suppose IFRS 15 is applicable in India from 1st April 18. Means what? You need to apply Ind AS 115 in the balance sheet of 31st March 2019. Agree?
Yes.
But since you're presenting the comparative of 31st March 19, comparative will be 31st March 18, you need to present your revenue figure of 31st March 18 also on Ind AS 115.
Yep. Comparison purposes.
Plus one more additional balance sheet of 1st April 17 will also be published, which will be converting 31st March 16 revenue as well.
Agreed.
Got it now? Now in future, remember, whenever there is any change in accounting policy, whenever there is a correction of a prior period error, why I'm using the term prior period error? Because if the error is belonging to the period 31st March 17, I'll use the term, okay, I'll use your language. Financial year beginning 1st April 2016. Or it is also said financial year ending on 31st March 2017. Different terms used. It means the same thing. Ind AS is applicable from financial year beginning 1st April 16. I can say Ind AS is applicable from for financial year ending on 31st March 17. Agree?
Yes.
So if it is applicable from financial year beginning 1st April 16 for comparative, I need to publish balance sheet of 31st March 16 also on Ind AS. And if there is any change in accounting policy or correction of error, if the error is belonging to the period beginning 1st April 15 to 16, can I correct it in this balance sheet? If the error is belonging to the period, yes, Manish. Yes. What is your query? Yes, Manish. I'm not able to hear you.
Okay, my question is that I'm a particular word you're saying publish. So does it mean that so when we are talking about that we have to go a year back and we have to publish retrospective. So does it mean that we are revising our returns as well accordingly because we have to comply with this new standard, or it's just a matter of preparing the financial and publishing it to the public at large or maybe to the stakeholders? So what is the exact meaning of publishing here? Are we reporting it as well, or are we just preparing and issuing it.
We are reporting the balances of 31st March 17. Along with it, we are reporting the balance of 31st March 16. Again, see, we are in year 2017. We are required to now, when you are publishing your 31st March 17 balance sheet, in which month you will be doing it? In May or June?
Yeah.
When you are publishing your financial statements in May or June, based on Ind AS of the financial year beginning 1st April 16, ending on 31st March 17, publishing a balance sheet of 31st March 17, you are required to give comparative of 31st March 16 also based on Ind AS. Along with it, you also need to report the figures of 1st April 15. That is 3 balance sheets being published. 3 set of figures being published along with the balance sheet of 31st March 17. You cannot go back to change anything. The only thing in your control is when you are publishing your 31st March 17 balance sheet, publish 2 more balance sheets along with it.
Okay. So, yeah. So I was just trying to understand that publishing means reporting as well, right?
Publishing or reporting means one and the same thing.
Okay. Thank you.
Hope this is clear.
Yeah.
And what I wanted to highlight was that if there is an error belonging to the period from 1st April 16 to 17, you can correct it in the balance sheet of 31st March 17. If there is an error belonging to the period from 1st April 15 to 31st March 16, you can correct it in the balance sheet of 31st March 16. Agree? But if there is an error before 1st April 15, where you will correct it? Which is error belonging to the period before 31st March 15 or of the period ending on 31st March 15. If there is an error in this balance sheet, where you will correct it? In that scenario, if there is any prior period error, you will not only publish current year balance sheet, you will publish comparative, but you will publish one more balance sheet simply for the purpose of correction of error of the beginning of the earliest period presented 1st April balance sheet. So in any year, if you see 1st April balance sheet, it means that either this entity has converged to a new gap, either they have changed their accounting policy, or either they have corrected their error, is the reason they are publishing a third 1st April balance sheet. Got it now? Got it? Hello? If you are looking at the financial statements of any company and if you see 1st April balance sheet along with the current year and comparative, it means that either this company has converged to new accounting, either they have changed their accounting policy, or they must have corrected their prior period error. There will be one of the reasons for publishing this third balance sheet of 1st April. Hope this is clear.
Yeah.
Now if I move to the phases, now the phases will be very clear now. In phase 1, 500 crore, the net worth having more than 500 crore. In phase 2, net worth having more than 250 crore. In phase 2, all the listed entities and all the non-listed entities having net worth of more than 500 crore. So in India, it happened in phases. 1st April 2015, phase 1 is 1st April 2015 or thereafter, voluntary basis. 1st April 16, mandatory basis. This is the financial year. Financial year beginning 1st April 16, mandatorily. For unlisted companies having net worth of more than 500 crore, for listed more than 500 crore, parent subsidiaries and JVs were also included as part of this transition. Clear now? Second phase, all listed entities not covered in phase 1, covered in phase 2. Their financial year began on 1st April 17. All unlisted companies worth more than 250 crores. Applicable. Banks and insurance companies were supposed to move to IFRS from 1st April 18. Banks have postponed the date. NBFCs, housing companies have all implemented Ind AS beginning 1st April 2018. They published their first Ind AS compliant financial statements. All the housing finance companies, NBFCs, published their first Ind AS compliant balance sheet of 31st March 2019. Is the reason you see a lot of turmoil in the non-banking financial companies industry in the market. Banks have postponed the date. The date for banks was 1st April 2018. The 31st March balance sheet should have been published on Ind AS in India if they would have followed the phase-wise dates. But RBI has not given any date yet. It is postponed for an indefinite period. Hope you're clear now. So this is all about the initial introduction. And we'll take a break now, and then I'll talk about why we do a diploma in IFRS from ACCA. Now, if you have to report your financial statements on the basis of IFRS or Ind AS, what are the things you should know? Like how you will go about it. So there's a system which you need to follow. The system is that we should know the local gap, and we'll convert that local gap into full IFRS or Ind AS compliance financial statements. If we are also required to prepare consolidated financial statements, then we should have a consolidation package, how we are going to merge the two balance sheets into one and prepare it from group perspective, and we'll be finally able to publish Ind AS or IFRS financial statements. So how we will begin? We first need to familiarize ourselves with all the standards of IFRS or Ind AS. Then select the accounting policy choices. Like there are choices given in IFRS: cost model or evaluation model, fair value model or cost model, nature of expense method or function of expense method. So depending on what we choose, we decide our accounting policies, and we select the accounting policies to comply with the financial statements on the basis of Ind AS or IFRS. Then we identify the key areas of differences. After we have done so, once we know the differences, we'll recognize the items in the balance sheet and income statement on the basis of compliance with IFRS or Ind AS. Like we'll recognize IFRS assets or liabilities as per the provisions of IFRS. We'll de-recognize some assets or liabilities which are not in line with Ind AS or IFRS now. And the previous gap was allowing that capitalization, but we do not allow that capitalization today. We'll be de-recognizing those assets or liabilities which are not meeting the requirements of new gap now. The capitalized expenses which are no more eligible for capitalization, insurance reimbursement assets unless virtually certain. So there are criteria now under IFRS or Ind AS which will tell us like when we are eligible for capitalization, when we cannot. Once we have done so, we have to classify all the assets and liabilities as per the requirements of IFRS, like redeemable preference shares. In earlier gap, we could show them as part of our equity, but redeemable preference shares under IFRS means that they are a liability and has to be categorized or classified under the head liability. So we'll do reclassification of assets and liabilities and we'll show it under the relevant head. And we'll measure them according to the conceptual framework of IFRS or Ind AS. Like LIFO is prohibited under inventories, only weighted average of FIFO is allowed. So if we have been using LIFO, that is no more applicable now. We can only use FIFO or weighted average. So if you're using IFRS or Ind AS for the first time, you need to review all transactions and look for differences. We'll take the trial balance and go through it, making analysis of all the material items. Correctly classify assets, liabilities, measure them, recognize them as per the requirements. And if it is wrongly done, we'll correct them or reclassify them. We'll also look at the company minutes of meeting to know the intentions of management, that why they purchase any particular asset. They plan to consume it into the business, they plan to hold it for investments. What is their reason? We'll read all the contracts, recognize revenue, construction contracts, financial contracts, and will record according to the new requirements, because these contracts will help us to analyze how the accounting is to be done now on the basis of financial contracts which are based on financial instruments, or leasing on contracts based on now IFRS 16 leases, or revenue contracts based on IFRS 15 revenue from contracts with customers. We'll also take information from the legal departments if there is any contingent liabilities or contingent assets to be disclosed. Hedging departments, if we are using voluntary accounting. For hedge accounting, we can set off our gains and losses against the hedged items. If you're not using hedge accounting, we'll do normal accounting under IFRS 9 financial instruments. The steps for conversion are: we'll de-recognize local gap balances, we'll recognize new gap balances on IFRS or Ind AS, we'll bridge the gap between local gap and new gap. We will take the difference, we'll make all the adjustments against retained earnings, and we'll have new converted balances on IFRS or Ind AS. Now there's bound to be a difference when you're converting your IGAAP balance sheet to Ind AS. There's bound to be a difference in assets and liabilities and in the total net worth of the company. Where we'll take this difference? We'll adjust all these differences against the retained earnings. This is all about introduction and how we'll go about the conversion process on IFRS or Ind AS.